Chinese home builders have lost nearly $90 billion worth of stocks and bonds this year, as China's housing boom shows signs of ending. A bursting of the housing bubble in China, coupled with an impending debt crisis, have added more strain to home builders desperate to rebound from record lows in stock levels. According to a Bloomberg report, Beijing has signaled a more favorable attitude toward aiding homeowners over builders in recovery attempts to stabilize the market. Builders have been battling a crash crunch this year due to government efforts to limit debt expansion. At the same time, home prices have steadily fallen, which has threatened the future of the industry and the financial stability of the sector. And help may not be on the way anytime soon. Chinese authorities are busy aiding homeowners who are still waiting on the completion of their housing projects, Bloomberg says, while dealing with consumers shunning mortgage payments en masse. In the meantime, builders are feeling more pain in the previously reliable bond market. Borrowers have defaulted on a record $28.8 billion on offshore bonds, according to metrics from Bloomberg. In July, the median dollar bond price for builders was 16 cents compared to 40 cents in March, according to the Bloomberg intelligence. Population and economic growth is also slowing in China, likely signaling a continuation downturn as Beijing pivots away from home building as means for speculation. The housing market in China is likely in the middle of a makeover that favors consumers. For decades, buying property was considered a safe investment in China. Now, instead of building a foundation of wealth for the country's middle class, real estate has become a source of discontent and anger. In more than 100 cities across the country, hundreds of thousands of Chinese homeowners are banding together and they're refusing to repay loans on unfinished properties, one of the most widespread acts of public defiance in a country where even minor protests are quelled. The boycotts are part of the fallout from a worsening Chinese economy slowed by COVID lockdowns, travel restrictions, and wavering confidence in the government. The country's economy is on a path to its slowest growth in decades. Its factories are selling less to the world, and its consumers are spending less at home. On Monday, the government said youth unemployment had reached a record high. Compounding these financial setbacks are the troubles of a particularly vulnerable sector. Life is extremely difficult, and we can no longer afford the monthly mortgage, homeowners in China's central Hunan province wrote in a letter to local officials in July. We have to take the risk out of desperation and follow the path of a mortgage strike. The mortgage rebellions have roiled a property market facing the fallout from a decades-long housing bubble. It has also created unwanted complications for President Xi Jinping, who is expected to coast to a third term as party leader later this year on a message of social stability and continued prosperity in China. So far, the government has scrambled to limit the attention garnered by the boycotts. After an initial flurry of mortgage strike notices went viral on social media, the government's internet censors kicked into action. But the influence of the strike has already begun to spread. The number of properties where collectives of homeowners have started or threatened to boycott has reached 326 nationwide. According to a crowdsourced list titled We Need Home or GitHub, an online repository, ANZ Research estimates that the boycotts could affect about $222 billion of home loans sitting on bank balance sheets, or roughly 4% of outstanding mortgages. Any momentum behind the mortgage strikes would add to a growing number of economic issues facing the Chinese Communist Party. When a rural bank froze withdrawals in Henan province in central China, it set off a violent showdown between depositors and security forces. Recent college graduates are struggling to find work with youth unemployment at 20%. Small businesses, the largest provider of jobs, are fighting to survive under the constant threat of COVID-19 lockdowns. Real estate drives about 1/3 of China's economic activity. By some estimates, and housing accounts for about 70% of household wealth, making it the most important investment for most Chinese people. In 2020, to address concerns about an overheating property market in which homeowners would often buy apartments before they were built, China started to crack down on excessive borrowing by developers. Real estate drives about one-third of China's economic activity, by some estimates, and housing accounts for about 70% of household wealth, making it the most important investment for most Chinese people. In 2020, to address concerns about an overheating property market in which homeowners would often buy apartments before they were built, China started to crack down on excessive borrowing by developers. The move created a cash crunch for many firms that had relied on easy access to debt to keep construction projects humming. As financial strain deepened, Evergrande and other large property developers spiraled into default, and the impact rippled across the industry. Last month, hundreds of companies that provide services and supplies to the property sector, such as construction firms and landscapers, issued a joint statement to government authorities saying they were facing a crisis of survival because they hadn't been paid for months. Homeowners of a partially built apartment complex in the central Chinese city of Zhejiang compared themselves to Rickshaw Boy, or Kamel Zaiganji, a tragic character in Chinese literature whose dream, a rickshaw of his own, is started by corruption and dishonesty. One of the homeowners who signed the notice was Andy Lee. Andy first purchased a $150,000 apartment in a development in 2019. After making monthly mortgage payments for 3 years, he learned in February that the apartment wouldn't be completed in May as promised. In fact, all construction had stopped. The Yufa Group, the developer, told the homeowners that the handover had to be delayed until December. "We don't even know what happened to the money." "How come there's no money?" Mr. Lee said. "We will definitely stop paying the mortgage if there are truly no other ways." We, as thousands of Zionzis, must throw away those shackles and let those who robbed us of money and smashed our cars know that Zionzi is no longer the lamb who is slaughtered by others. The homeowners wrote in a notice last month to local banks and government officials. If the developers do not finish building, all owners will forcibly stop repaying the loans at the end of August, they wrote. According to a report, the Yufa Group was not immediately available for comment, and a phone call went unanswered. A second listed number had been disconnected. The local government in Zhejiang has said it would create a bailout fund to provide capital for struggling developers. Last month, the Politburo, China's top ruling body, said local governments should make sure unfinished buildings are completed. But Michael Pettis, a professor of finance at Peking University, said the mortgage boycotts are part of a bigger issue, the bursting of a Chinese housing bubble that has been inflated over decades. Even if Chinese authorities provide the developers with enough capital, the underlying homes are still overvalued, he said. There has been all this fictitious wealth that has been created by surging real estate prices that is just not justified, Mr. Pettis said. Those solutions are simply temporary solutions to try to make things less bad in the short term. Ultimately, I don't think they will succeed.